It's not tottering steps anymore for the footwear industry, as organized players in the vertical seems to have put on their running shoes. Organized footwear players such as Relaxo Footwear and Bata have reported a turnaround. While Relaxo posted double-digit top-line growth and improvement in margins, Bata India lagged estimates due to slightly lower than expected recovery and impact on margins due to adverse mix. Let's talk about the company performance. Relaxo reported a 12% top-line growth in Q3 FY21, while Bata's volumes were 88% of last year. But the silver lining is that Bata reported production had reached pre-COVID levels in January 2021. On a year-on-year basis, Bata saw its revenues dip by 25%, but on a quarter-on-quarter basis, it increased by a whopping 67.3%. But Bata EBITDA margins improved 1,400 basis points, driven by operating leverage and cost control measures. Margins were lower on a year-on-year basis due to negative operating leverage and adverse mix. For Relaxo, gross margins improved 100 basis points, driven by benign raw material process, while EBITDA margins improved 520 basis points on account of operating leverage and savings in selling and administration expenses. EBITDA and net profit grew 46% and 66% respectively. Let's look at the outlook of the companies. With further opening up of the economy, increasing vaccination and reduction in COVID-19 cases, the mobility of population has improved, leading to growth in the organized footwear industry. With opening up of schools and further unlocking of the economy, footwear demand is expected to rise. A strong double-digit growth for both Relaxo and Bata in FY22. Also, unorganized players have been severely impacted by COVID-19, which would accelerate the shift towards organized players. Relaxo's stock has outperformed the Nifty since then, delivering returns of 15% as compared to the 11% returns by the Nifty. Bata has relatively underperformed, just about reaching pre-COVID levels in January. Former wear, including schools and the fashion category, was subdued, but the company saw a bounce back in the casual, fitness and essential segments. As the economy opened up, it won orders for supply of safety and industrial shoes in its institutional business of cement, steel and railway sectors. So are footwear prices to increase where raw material prices have been increasing, with both rubber and leather prices on an uptrend. Also, in the union budget, import duty on chromed and finished leather has been increased to 10%. It is likely that footwear players are likely to resort to price hikes, which would largely offset the increase in the raw material costs. Overall, the opening up of schools, colleges, and with people traveling more, the industry can only see an uptick. Therefore, Relaxo offers a good option and Bata can be a good stock to hold, but only for the long run.